Okay, I just realized I forgot to update the stock market in my last video where I talked for just Bitcoins, altcoins, and the US dollar for 10 minutes and obviously the USDT dominance. So I thought I'd push out a quick video on the stock market. You can see the S&P 500 has cut through that $7,400 resistance level. However, the stochastic RSI is still printing that bearish divergence. Even though price has grinded higher, the oscillator has not managed to max out. So potentially, a top is close. Especially, we're now hugging that +2 standard deviation band on the daily time frame. And you can see, historically, we can only hug that +2 deviation band for about 2 weeks. And we've pretty much already hugged it for 9 days. And last time we hugged it for, 9 days. So maybe today is the day that we get that absolutely massive flush out. What was this? From high to low, it was about, 59.80 down to 57.40. It's about 4%. The time before that, when we were up at the 2x deviation band, where is it? Here. In July of 2022, we hugged price action for nearly a month before we got that flush out. Obviously, that flush out was much bigger because it was a bear market. So potentially, price could continue grinding up for another, week, 2 weeks or so, or we could see the flush out very soon. And if we do flush out, we'd definitely be looking towards, if we get a 4% flush out, maybe 7,200 points, even back to, 7,100, 7,000. I wouldn't be surprised. I'm not saying sell everything right now, but I definitely think now is not the time to be FOMOing into new positions. And, if you follow all the good traders like Peter DiCarlo over at Traders Helping Traders, if they've bought in through here, from, I don't know, anywhere from 6,400 points up to, I guess, 6,800 points. They're probably taking slight profits from here. And maybe starting new positions on individual stocks, but only for the short term. I don't really like buying at these overvalued ranges. NASDAQ, pretty much the same story. It's probably even more aggressive move than the S&P 500. You can see right here. The NASDAQ, typically last time we hugged the +2 standard deviation band for 17 days or so. And this time, I think we're already past it, like 14th of April. Yeah, we're pretty much 30 days up at that +2 standard deviation band. Like, this rally has been extremely, extremely strong. And if I scroll back, how far back am I going to have to scroll? You can see through here, we kind of tested the +2 deviation band for about 2 weeks. And I'm not going to bore you with more back testing, but you can just see through here, this move out of the COVID low, from the 6th of April until we got that breakdown, the 30th of April, was 24 days. So time-wise, we're due for a correction. However, moves this strong out of a low typically aren't the end of a trend. It's typically the start of a new uptrend. And I think this is where Jason's videos, where he displays the famous quote, I think it's by Warren Buffett or someone, "The market does just enough to fool the majority of the people the majority of the time," is true. Down here, everyone was bearish. We thought, a massive world war was going to happen. Everyone was, sentiment, blah, blah, blah. Here, all the top traders and everyone got bullish because, we saw it as a swing failure pattern, higher low above support, getting back above some of these previous tops, oscillators like the monthly BX trender closing with higher lows. And, everyone that's FOMO'd in now, I guess Jason could call it as potentially lucky retail in a way, like the smart money bought through here, whilst everyone else is FOMOing. So maybe, you know, we'll sell off into a higher low. More than a maybe. I think it's very, very likely we'll retest, at least in the next few weeks. We'll pause or correct a little bit. And, you know, that's where the lucky retail is going to buy into the rally. If I just use last year, for example, you know, the smart money got in through here, potentially through here. Lucky retail bought through here. We grinded up a bit more. And all the late retail bought the top before a correction. So I think something like that is going to happen. And obviously, if you are trading, just follow your individual stocks, trading strategies. Like something like AMD, I would not be touching. I'd only be selling anything that I bought through here or through anywhere in history because it's like in all-time highs. But something like Nvidia, if you're following Peter DiCarlo over at Traders Helping Traders, it is still fairly, you know, new in the bull cycle. It's only just broken back into all-time highs. So, you know, if it corrects, every dip is for buying right now. But something like, you know, SanDisk or whatever that's gone parabolic for a long while, I would just not be FOMOing in on, even with pullbacks, just because of how far it's risen. And, you know, for us to actually start breaking support is, what, like a 60% move down or something like that. So the risk versus reward just isn't there for me. But as always, go follow Peter DiCarlo on X, Traders Helping Traders on YouTube. Go follow Jason and Michael Pizzino on YouTube and X as well. And yeah, just be smart with your money right now. Like the S&P 500 is in greed, but you can see with sentiment only just starting to cool off in like July of 2025, sentiment can cool off further with price continuing to grind higher. So if you want to be the lucky retail, I guess, consider buying any dip, any correction from here, but I would just not be FOMOing in right now with how overbought we are. Even a small 2, 3, 4% correction, I would personally be buying. I'd be looking at, you know, stocks that have only just started their bull cycles, like Nvidia, and not stocks that are late in their bull cycles, like SanDisk or AMD. Anyways, that's that. Thank you all for watching. Please like, comment, and subscribe. Goodbye.